industry. You know, one of the things we did hear the challenge, and starting in January, we ramped up our production in the Americas, including our facility in North Carolina, where we are now manufacturing an additional 40 to 50 million masks per month get into the U.S. healthcare system. And we talked a little about this in the pre-meeting. One of the issues we're struggling with is the demand increase. You know, used an anecdotal example. One hospital in New York that traditionally uses roughly 10 to 20,000 masks a week are now using 2 to 300,000 masks a week. So you multiply that times the entire U.S., let alone the same demand outside of the U.S. That's part of the issue we're running into. Is even with a significant ramp up in supply, you know, there's still that demand that is much greater than that supply.
And I bring that up because when we discussed back in a room, we were in a conference room, very nice one actually, it's called the Cabinet Room. That statement was made that they've been delivering for years 10 to 20,000 masks. Okay, it's a New York hospital, it's packed all the time. How do you go from 10 to 20 to 300,000, 10 to 20,000 masks to 300,000? Even though this is different, something's going on. And you want to look into it as reporters. Where are the masks going? Are they going out the back door? How do you go from 10,000 to 300,000 different places? So somebody should probably look into that, because I just don't see from a practical standpoint how that's possible to go from that to that. And we have that happening in numerous places. And not to that extent, that was the highest number I've heard. That's the highest number you've seen, I would imagine, right? But this man makes them and delivers them to a lot of hospitals. He knows the system better than anybody, and I think you were more surprised than I was when you saw that number, so thank you very much. I hope I didn't get any of your clients in trouble, but it could be that they are in trouble. So they have to look at that in New York. FEMA is working with these companies to launch Project Airbridge to expedite the movement of critical supplies from other countries to the United States. The first flight arrived at JFK Airport in New York this morning, filled with 80 tons of personal protective equipment, including 130,000 N95 respirators. Those are the ones that we were talking about before. 1.8 million face masks and gowns, 10.3 million gloves, and many other things. Millions and millions of different items. FEMA has.
What do you need, a link? Let me see. How do I get off Twitter here?
About 50 flights we're going to have, I think, including the one that came in today. We're up at 51 flights with these massive planes from the different companies that were so nice to be here today. Would you like to say something on behalf? Please, come on. Thank you.
Thank you, Mr. President, for the incredible leadership. I will share with you that UPS is really proud to be part of this effort. Vice President Pence and I had the opportunity to speak before, and the way we're going to win this war is with great logistics. And UPS is going to be part.
What's up, everybody? Am I recording right now? I think I'm recording. Let me see. Recording to the cloud. All right. Better early than never, I guess. You got Trump and the task force on the box as we get ready for the opening of futures here. Whoops. I just killed the TV. What's up, Bonnie, Sean, Paul, Josh? What's up, everybody? then let's see if this one. Oh, get the code in here. So I'm reading a headline here. White House and Congress are boosting the Fed's ability to mount an economic response to the coronavirus. And they're off. Shouldn't be too bad. What are we down here? Oop. 60? Can of corn. What's 60 smooth points these days? I'm doing all right. New York, what happened was Manhattan is infested, or as they say in the biz, well seeded. So Manhattan is a fiasco. But what happened was you had a lot of people, especially people with money and all, leave Manhattan and come out east, Long Island, towards the Hamptons, because we're not on top of each other out here. But now the word is we're going to start to see a little uptick out here, as they bring the infestation, So we'll see what happens, but knock on wood, so far so good. And hopefully as we get through April, we'll start to see this shit cool down a little bit. But yeah, to everybody out there, stay safe. All right. And I posted in the chat. Hopefully it went through and you guys saw it okay. Anybody who's new to the webinar, welcome, by the way. You could go to wallstreetjesus.com. All right, and there's a lot of information on here. If this is all Greek to you and this is the first time you're hearing about any of the stuff mentioned on this webinar, go to wallstreetjesus.com. And if you see right here on the tabs, these are the most important parts of the site. Strategy, if you click on that, some quick and easy to read write-ups on all the information we discuss as far as strategy and signals are concerned. Market updates, I post a lot of cool stuff from time to time, both on sweeper activity, flow, sentiment, that sort of thing. And the product page is where you can take a peek at all the stuff, premium packages we have to offer. We have offered a free trial, no credit card required. For a while now, we just kept it as is. That's this right here, 3-day free trial. You get access to the steam room, all right? And over the course of 3 days, at least you get an idea of what we're looking at each and every day, all right? And then you can see here the prices and so on. All right, so wallstreetjesus.com. Let me get that out of the way because I forget. And then as I'm running out the door, I get all the questions. All right, so we got futures opening here south about 50. Should find some buying. Let's see, what do we look like on the daily? Yeah, we'll probably find buyers. All right, so on that note, let's talk a little bit about what we saw last week. Sunday's webinar last weekend was open to everybody, so hopefully a lot of you on this webinar were on that one as well, so you could get an idea of how we move from week to week and what we're looking at here, okay? So basically, if you remember last weekend, we spoke a lot, predominantly the whole webinar, we focused mostly on sentiment, okay? And there was a reason for it, and the reason being that we were starting to see enough of a washout on sentiment on an intermediate time frame, okay, to where over my experience from watching these signals, buyers have a tendency to show up, okay? The selling has a tendency to show some signs of exhaustion, and the probability goes up for some sort of squeeze. And I was trying to put the best words around it, how to explain it to you guys. More of some stability, okay? And that's the biggest takeaway for me from when the intermediate term, the sentiment signals, the positioning signals, when they start to light up bullish, okay, the first thing that comes to mind for me is some stability. Not that, you know, after a rally like we just witnessed, we can't trade lower for a couple of days, right? Not that we can't test lows, but unlike what we've experienced up to that point where buyers were nowhere to be found and sellers just dominated the whole tape, right? Liquidation mode, that sort of thing. Now we start to see some signs of stabilization, right? Some constructive signs, some buyers coming into weakness. More names starting to act well as far as price action is concerned. We start to see out of the flow at least some stock picking going on, even if they're not taking an aggressive approach overall. We start to see some selective stock picking in individual names. All right, so that's the biggest takeaway, because a lot of times, you know, when players just are introduced to sentiment and how it can provide an edge to any aspect of trading, you know, they look at, like everybody else, buy, sell signals. Everything means buy or sell, right? For example, I'll give you an example. When was it? Friday, I think I posted the bull bear positioning indicator, right? At a BOVA, okay? And if you guys remember, last weekend we were looking at it, it was already in bullish territory, all right? I posted it Friday, it's still in bullish territory. It's actually at a 0, where it can't go much lower. So, you know, automatically I get every troll and a mother on Twitter. How could it be at 0? The market just squeezed. I don't understand. You buy after a 20% squeeze, blah, blah. You know, not knowing or not even taking, you know, the laziness, not even to ask the question, at least, where was it last week before the squeeze? You know, was it flashing a buy signal then? Just automatically they look for, they're searching, they're hunting for unicorns, is how I like to call it. You know, they're looking for this magic ball that you shake up every day before the market open, and it tells you what to buy, when to buy it, and when to sell it. And, you know, each and every day, continuously, that's what they're searching for. And if something doesn't meet that criteria, they think, oh, yeah, it's bullshit, it's fake, throw it away, useless, you know? And obviously they're spinning their wheels, but, you know, you can't, with anything in this game, you can't look at it through those lenses, because a lot of things are going to come across your desk that could provide an edge, especially some things more than others that fit with your type of trading strategy, you know, fit well. If you're looking for the wrong things, you know, you're going to miss some things that come across your desk throughout your time in this game that really could be quite useful. All right. So that's not sentiment. Sentiment is basically, especially how we use it for swing trading purposes over an intermediate term, it gives us a backdrop, right? So at the highs, you know, it came early, but it flashed some caution signals that, hey, listen, it's a smack upside the head. If there's a legitimate trigger, right, a catalyst to create some selling out there, things can get ugly rather quickly, because according to our sentiment signals, everybody is leaning all in, right? Everybody's long. If there's a catalyst for selling, there's a lot of supply that's going to come to market. There's a lot of things to be sold, okay? So now we're at the point where it's the total opposite, okay? It's the total opposite. Right now, unlike into the highs, okay, we've basically in a straight line dropped 30% from the highs, 35%, whatever it may be, the quickest drop from highs into a bear market ever, okay? And if you remember, we were talking about this the first week the market started dropping. There wasn't enough time in that first week for everybody to get out, for everybody to be fearful, okay? We finally got to the point where there's enough time behind this correction that there's a decent amount of fear out there, right? Whoever needed to sell they were too, they were on leverage, right? Margin, or too long, right? They chased the highs. The Fed forced them into risk assets. They're pretty much out by now. Okay. So the key takeaway for that, all right, is two key takeaways for me. One, throughout my whole entire career, you're talking about 20 plus years, all right, whether it's magic or whether, it makes sense just on the dynamics of the marketplace, when sentiment gets this washed out, buyers show up. That's where buyers like to come in and start to pick up some of the pieces, that have been damaged with everything else. All right. So, and the selling pressure a lot of times not totally subsides, but starts to show signs of exhaustion. Like I mentioned earlier, you don't see as much follow through on the downside. In other words, you'll see a big gap down at the open, right? Or some negative news. And it looks like, oh boy, here they go. They're going to clobber this thing. And then the selling just doesn't have much gusto behind it, and then buyers show up, boom. I give an example, Friday, okay? The job number, right? Everybody, that job number, if that job number wasn't factored in, I don't know what the hell's factored in, right? Everybody was talking about how the unemployment number was going to be a disaster. Everybody, right? That's part of the reason why the market looks like this, like it does now, right? Is because, things are a mess out there, okay? So that unemployment number was totally factored in. So you had that unemployment number hit, the futures were down overnight into that number, right? You started to hear people oohing and ahhing over that number, even though they expected it. And then what the price action look like, right? Whoop, U-turn, and then started raging higher, basically making up all that weakness. And everybody's around scratching their heads, right, on CNBC. What the hell is going on? Why is the market rallying off that number? So, and that's an important takeaway, guys. Even just things, especially you're new to the game, okay, as far as things you're going to learn over the course of your career in this game, if that's not a perfect example, all right, to show you that the stuff you and I talk about, the stuff you and I are fearful about, right, when we start talking about it, the market has already factored that in months ago. You know what I mean? If we're concerned about something, if we're worrying about something, the market already has worried about it. Okay, it's the stuff that you and I aren't discussing, that we don't see right now, that is the major danger. Okay, but once everybody starts talking about it, like that job number, ad nauseum, day in, day out, the market just factors that in. And just like on rallies, sell the news, they sell the news and squeeze them. All right. So that's a key point, though. That's a key point, because as we spoke about last week with some of the sentiment stuff we were looking at, showing, washout signs. All right. I wrote up something here, just basically a little guideline to keep me on the right path here, because there was a couple of things I wanted to discuss with you guys. All right. So this one right here up the top. Hold on, let me get my fancy pen ready too. I got to practice with this pen. That's the only way I'm going to get better, All right. So basically this first thing here, okay. As we discussed, if you remember numerous times last week on the webinar, if any of you attended, that the news, right, the headlines, the noise, it's all noise, okay? The noise from this point as we go into next week, okay, is not going to get better, okay? It's going to get worse, okay? It's not, in other words, if you're looking for opportunities now, okay, especially on the long side, or even if you're looking to short, you have to understand, okay, that we already know, and the market's been telling us that there's no light at the end of the tunnel right now that we're going to see, okay? You see, we were talking about last week, right? Remember New York, we were talking about a little bit. I'm from New York. I know a lot of you out there are from New York. We were talking about how those numbers were ready to explode, right? Little by little, the next couple weeks, right? It's about anticipating that stuff. We knew that already, okay? So when you're playing in these type of market conditions, you have to work on the ability to block out the noise and pay attention to your signals, okay? If sentiment's washed out, right, over the intermediate term, it's already factored in that the noise, the headlines, the news out there is going to be a debacle, okay? But if we see flow, if we see professional money coming in buying that negativity, all right, that's usually a good sign for the market to trade higher and squeeze, all right? It's so easy though, especially in these type of markets, it's so easy to get wrapped up into that noise, into the news, into CNBC brainwashing us all day long. You know what I mean? It's so easy to get emotionally wrapped up into all that negativity and that news that it makes it so difficult for us to do the right thing, which is going to be a lot of times to do the opposite. All right, but what I found that helps me a lot is reminding myself, okay, that, all right, Jesus, I hope you're ready because this news this week is going to be awful. You're probably going to want to start working on the bunker again. You know, you probably want to start getting some of those things into place. But if you see sweeper activity, you're going to be ready to pull the trigger, even though deep down inside, you want to go work on the bunker. Make sense? All right. If you're not aware of that ahead of time, there is no way you're going to be able to do that. And the likelihood is you're probably going to end up doing the wrong thing into that, and that's shorting, right? And getting run over because of the negativity out there. All right, so I find it important to always, each and every week, mostly in this type of climate, always continuously remind yourself, especially as that bad news is coming in. All right, we know that, right? This is why the market looks like this. This is why the market came straight down without a buyer to be found. We're seeing the reasons why now. Everybody's starting to see the reasons why now. Okay, so be ready for that this week. All right, that's the most important thing. The second thing I have on here, okay, is based on sentiment. All right, and I got to remember I'm talking to non-members as well. But unlike last week, where tactical sentiment, okay, in simple English, that's extreme short-term sentiment, traders, how they're positioning, okay? Last week, we had that line up as well, if you remember, okay? Remember, we had a bullish signal at a trader sentiment, getting us already prepared to look for signs of a squeeze into weakness, okay? We are not at that same point this Sunday as we were last Sunday, okay? We have a little work to do, and meaning work, one down day, we'll do it, all right? So just for a heads up, tomorrow, okay, we're not going into the market already set up on a short-term basis. We may need to be a little more patient and let that play out, all right? And let's see what I had here. Right, so sweeper activity, okay, eventually that's the trigger that gives us the heads up on the squeeze, right? So when we get that tactical sentiment set up like we did Sunday, all right, the first signs that we see out of sweepers that they're positioning for a squeeze. And here's a good example, right? Last week was a good example to go over. When we're looking for a squeeze, it doesn't matter what they're buying. Last week, the most aggressive activity for the week, okay, what two names were they in? Anybody want to venture a guess? I know you members know the answer. But there were two names. They tell the whole story of what the action was all last week. SDC is one. Smile Direct, right? That's one of the biggest pieces of garbage on the face of the earth, okay? But there's one other name that might be worse than a Smile Direct, and Paul just named the symbol. TLRY. Okay, TLR, yeah, the weed name. Okay, those two, as far as individual stocks, that's where the most aggressive sweeper activity showed up last week, if you can believe that. Okay, and what I mean by aggressive sweeper activity, okay, healthy markets, a lot of times what we see is, boom, they come in and they tattoo Apple calls relentlessly. Apple calls, Apple or AMD or a Micron, right? Or a Bank of America when the financials are hot. They come in and they hit leaders and they hit them hard, right? CRM, okay? Those names have a reputation that when a market's ready to bottom, they get lit up, all right, from buyers. We didn't see that. Eventually we saw buying in some of those names, okay? But the most aggressive activity to stand out initially was in TLRY. I think it was Monday right before the close, right? Or Tuesday, one of those days. All of a sudden they come in and they start bombarding this thing, right? Because why? It doesn't matter, if they're playing for a squeeze, and that's what we're looking for, it doesn't matter that they're playing a TLRY or an Apple, right? If they're playing just for a squeeze, they're looking for the biggest bang for their buck over the short term, and that's where they want to make their money, right? As opposed to trying to, nail out a bottom where they want to buy a CRM or an Apple into weakness, with some time, okay? All the TLRY and the SDC too. Honestly, I didn't even make any money with this TLRY, okay? I couldn't even get myself to buy it, but I did have a nice hit on this SDC 2 consecutive days, because this is not a name that catches a lot of action, and words don't do it justice. Unless you saw it come in real time, they were sweeping the living daylights out of this thing, okay? The living daylights out of it. Like, look, this is where the action happened, okay? And here's sweeper activity for you, right? Doesn't always translate into this, but this is what it can give you a heads up on, right? This thing's dead as a doornail. Dead as a doornail for the week prior coming into, all right? Then all of a sudden, again, when you're playing for a squeeze, it doesn't matter. You don't want to overthink it, okay? But whether they're shorts that are protecting or they're nervous about a short squeeze, right? So what do? If you're short SDC, and it's got a huge short position, if you're concerned about a squeeze, the easiest, the quickest, most efficient way to protect yourself would be to sweep calls. Okay? That's the only way you can get enough protection on to guard against a squeeze coming into that name. Okay? So whether it was just buyers playing for a squeeze or shorties protecting against a squeeze, professional money was concerned and nervous enough about a squeeze. That's why they got aggressive, and we saw the type of flow that we did in these names. Okay? And then, boom, you get that explosion. The more they sweep, the more they cover, it snowballs itself, and you get a nice move out of it. All right? But again, I'm just going back into these names. For those of you who are new to this and may not be familiar, it's the best way to learn. It's a perfect example of squeeze flow. That's the definition of squeeze flow. Nobody's coming in and trying to nail a low and make a bet on SDC or TLRY longer term. They want weekly, front month, and they want to get out into the heat. All right? So that's what I referred to when I mentioned look towards the sweeper activity as a heads up, as a guide of a potential squeeze coming in. All right? And that's what we want to look for again this week. It works well in this market. Why? Because when you're in this type of environment and there's not a lot of buying out there, which has been the problem, okay? You see more put buying, protection, blocks, hedging, okay? When they come in and get aggressive, it stands out that much more, all right? You see it in the pace. It just looks different to what we've been looking at all day, each and every day, all right? So that's the main thing, again, we want to focus on into next week, into any weakness. We want to look for any type of activity, on the sweeper end to signal that a squeeze may be on over the short term. Okay, that helps out with the timing. What else we got this week? We have, what's this big? Oh, okay, the pension fund stuff that we've been paying attention to, right? The rebalancing, that's in play again this week. Can offer up some support. In other words, dip buying may be in effect. The problem is, as far as an upside edge, I think it's not there as much anymore. Okay, why? It's being talked about, has been talked about a little too much, right? It's out there. They front run it, right? We saw last week what happened. What day was it where it was another crazy day off that stuff into the bell? I can't keep track of the days. Wednesday, Thursday, where all of a sudden late, there was a ton of buying to come in and the market just went bananas. One candle. Was that Wednesday or Thursday? Anybody remember? Wednesday, right? Wednesday? All right, so Wednesday, people are telling me, if you remember what, you could go back, look at a chart on Wednesday, late into the bell, you know, all of a sudden you had a ridiculous amount of buying. I think Mach was like 8 billion to buy, something crazy. And you had just this crazy move into the close. All right. And when pensions need to rebalance, we spoke about that last week. That's when the bonds and equities, their averages are out of whack. So in other words, you have equities that have been underperforming, bonds have been outperforming. They want to keep those percentages at a certain level, so they need to rebalance portfolios. Okay, so how do they do that? By selling bonds and buying equities. All right, and they're moving around a big amount of money. A lot of times you'll see that in the price action. All right, so unlike last week where I think it offered up an upside edge, right? We wanted to keep an eye out for it, get in the middle of it, especially for intraday trading and stuff like that. I think now the way to look at that is looking for dip buying into weakness more than those runaway rallies into the last hour or into the close, okay? Because we've seen last week, we've seen a lot of money front run that action, anticipate that action, so it may not have as much luster, all right? But the most important thing, if you are paying attention to that stuff, the sweeper activity, Mach, we're not getting we're not getting any mock reads that we're going to have confidence in because nobody's on the floor anymore. One right before the bell is probably the best one to pay attention to. That's a little late, but you know, usually sweeper activity, mock, and just watching the price action can tell you a lot about whether that stuff's in play or not. All right. One of the last points here. Intermediate term sentiment, as we spoke about, right, last week and this week, is in the neighborhood of where markets have a tendency to find buyers come in and support and stabilize prices, okay, into weakness, all right? And I want to hit home on that point just as an example. So in other words, okay, like we all want to know, right? We all want to know whether this squeeze has, you know, more upside to 2,800, 2,900, right? So we can buy wherever we want to buy, and we know there's some squeeze left. Until we see aggressive sweeper activity as confirmation of that, I think the best way to approach intermediate term sentiment is to look for opportunities off those pullbacks. Okay, like I explained to you guys earlier, from my experience, when you have sentiment line up the way it is right now, okay, exactly what's going on right now, all right? And this is a small sample size. We're open about a half hour, okay? But you see how off the open of futures here, boom, they sell them, right? Looks weak. Sometimes, a lot of times we've seen that tumble into something larger, okay? Because where intermediate term sentiment is now, the probability of that happening is not as high anymore. As a matter of fact, you have a higher probability now of these gap downs, these rollovers, these big fades finding buyers. That's a big difference, right? That's a big difference. especially if you were playing the short side. Now you want to be careful shorting in the hole into weakness. A lot more careful than you were, maybe earlier on in the sell-off. Okay. So at the least, what we should see, right, give or take a particular level, we should see some chop. Okay. Some chop. Hopefully with some flow, we see a little upward bias towards it. But it's a little too early right now to talk about upside because the flow is just not there for it. All right. So weakness is the opportunity. They try to crash it, big fade, sell-offs. You want to look, that's where you want to look for entries. Okay. Especially those of you who are playing this market tactically, right? You're being quick. That's part of your agenda. You're not interested in buying and putting away stuff right now. You want to remain quick. You want to try to be as patient as possible and wait for those sell-offs, or if it's intraday, wait for those fades. Okay, that's where the best risk reward is going to come from, as opposed to chasing, late in a rally, chasing a breakout and stuff like that. All right, so we should see enough of that. And with volatility as high as it is, okay, there's enough room for us to try to make some money. Okay, if there's weakness, they come in and buy that weakness. There's enough room over the short term, intraday or a couple days, to where we can flip and try to make some money. All right, so that's what we want to pay attention to, at least as we start the week off here. What else I got here? Oh, okay. So the risk, right? The downside risk to that. Usually, again, I talk from my experience, when these type of sentiment readings we're getting now, that we have currently, okay, when they get ignored, okay, and the selling pressure is not met with any buying, okay, and you see markets roll over, pretty much ignoring those sentiment signals, okay? From my experience, usually that equates to something larger at play, okay? I have here credit-related stuff, right? So you have some 2008, credit freezing up, okay? Defaults, companies going out of business, funds going out of business, right? Where buyers, no one's paying attention to any sentiment stuff when you have that big of a debacle right on your doorstep, okay? But I will say this, when the couple of times I've seen that happen, okay, 2008 was one of them. There was one, I think 2011, that got bought up rather quickly after that. But usually when they ignore this type of sentiment and you see follow through to the downside or selling, okay, a lot of times that ended up being the final wash. Okay, the final wash, that's it. When that thing finally got done, bottomed out, the market bottomed from there, and you had the start of a whole new bull market, and the selling was done for a long period of time. All right, so there's good and bad from my experience that has come out of intermediate term sentiment signals failing, which is not often. Okay, again, 2008, every time I post a sentiment signal, I get the same question from everybody. Well, let's see what it looked like in 2008, right? Everybody wants to see any signal and what it looked like in 2008, right? Because if it ever failed, it was likely 2008. All right. The bull bear indicator from Bank of America, right? The BOVA bull bear indicator. The one major failure, I wouldn't even say major because I'll tell you why, but the one failure out of that indicator was in, I think it was July 2008. It flashed a 0. There was a squeeze over the next week. That indicator remained in bullish territory, okay? And then the market rolled over, that final rollover, which was what, 40%? When it was game over, Armageddon style? When I was stuffing money under my mattress and taking it out of banks, I told you? okay, that's when a lot of intermediate term sentiment signals failed, you know, and then ultimately the market bottomed out from there and headed higher. All right, so they have failed before, but if you back test these things, they haven't failed as much as you would think. More times, obviously, they ended up being great opportunities, but they can fail, obviously, if there's a larger force at play. So understand that. I know most of you do, but just in case you thought that once these things light up green, you could do whatever the hell you want. All right. What else? Oh, and the last thing, worst case scenario, in my opinion, and some signs that we're seeing out of the flow, what we should start to see from this point, regardless of whether the market trades higher, we chop around, you know what I mean? Like I think we might do, chop around, maybe test the lows, squeeze off fades, that sort of thing. Or, you know, we got a little lower to go. I think that the sweepers are going to start to find some names and do some stock picking. Okay. In other words, you know, the whole saying the baby got thrown out with the bathwater type thing. Okay. A lot of things got clobbered just with the overall market and total liquidation going on. Okay. And we're going to start to see more names catch flow selectively, right? Probably companies that are doing better, that may even thrive in this type of mess. We see a little bit of it with like a Zoom and a Teledoc, right? But that broadening out in a larger scale. All right, so that's a good thing. I'm not saying it's a bad thing. It may be a bad thing if, you know, you're only relying on a rallying market in the indices to make money. But if you're interested in stock picking, like I am, like a lot of you out there are, we should be able to find some alpha out there in individual names. It may not be, you know, as much as we normally would get in a rally, but we should start to see an uptick in that type of flow. Okay, so these are all the things that I'm looking for and looking at going into the week. All right, here is where sentiment as a whole. Okay, this is what we looked at last week. I want to try to get this to, I guess this is the best way you guys can see it. All right, this is what we were looking at last week, sentiment broken up into the time frames. All right, so you got short-term sentiment here, right? Trader sentiment, as I like to call it. Okay, so this is all quick. This is, you see, you buy weakness, you get a size squeeze, you want to sell into that. Okay, this is not looking to nail bottoms. Okay, you're just looking for the quick short-term squeeze, where in these type of market conditions could be, you know, quite rewarding. All right, SDC, TLRY, those were examples of names. We go into the start of the week basically neutral. All right, I would say closer to a bullish signal than a bearish, and we'll see, you know, how quick maybe we get some weakness Monday. We start to see these things light up. All right, but it's a little different than last weekend where these things, short term was already set up for us for the most part. Intermediate term, this is some of the stuff I looked at that makes up the overall bullish signal, okay? Bank of America bull bear indicator. I think I might have it on here. Hold on. We can look at that. Oh, I got to go back. 1 second. How do I move this out of the way? Bear with me. So you guys, I know most of you saw it, but those of you who haven't, okay? That's the bull bear. 0. All right, last Sunday we looked at it. I think it was, I don't know if it was in the 2s or something, but it was in buy territory. Okay, now it's at 0. I see questions already on this, okay? Like I mentioned on Twitter, what this is, okay, it has nothing to do with price action. So forget price action. Forget it. There's no reason to look at the price action and try to relate it to this. Okay, because that's the most common thing I'm getting. The market squeezed. How's the bull bear indicator lower? This basically is positioning. Positioning makes up this indicator. Okay, so if funds are liquidating, right? If there's fund flow still, liquidation mode and fund flow, even into a rally, this still is going to, you're going to have a better, stronger buy signal out of this than you had prior, regardless of what the price action did. All right. So here you go. This is where we are now. Okay. Based off positioning, and in simple English, that tells us everybody who needed and wanted to sell off this downdraft is out. Okay. Is out. That doesn't mean, Citigroup doesn't go under next week, and then you got another round of liquidation. You understand? But everybody who needed to get out up to this point is likely out, all that forced selling. CTAs, hedge funds, all that stuff. Okay. Here's the other one. Okay. That's a little longer term than the bull bear of BOVA. This is the panic euphoria model. Okay. At a Citigroup, Tobias Lefkowitz. A lot of traders who they know everything, right, will tell you bad stuff on this about panic euphoria if you back tested nonsense. Again, if you use it as exact buy sell signals, you're wasting your time. Okay, it's more of a gauge on the backdrop and positioning out there. Okay, and what it tells us now is the amount of selling off this downdraft is basically a panic read, right? It's a reading of panic of the amount of selling that's been done, off this recent sell-off. Okay. The highs, same thing. People were talking bad about it. It was in euphoria, right? And, you look at what happened, virus or not, I guess their positioning was a little euphoric. Okay. Now, as you can see here, we're on the total opposite side of the spectrum. Oops. This is the problem with myself. I get lost sometimes. Okay. All right, so what do I mean by flows? I see somebody talking about. Like, you see this? Okay. These are just weekly equity flows. Okay. Money coming in, money coming out of equity fund flows. All right. And you see there, all right, pretty easy to understand. You see that, right? That's money coming out of equity funds. All right, and that's just measure of equity funds, right? We talked about hedge funds. They're out as a whole, right? They're completely out of being from all in to all out. All out. It's basically no long exposure as a whole, okay? So that's what makes up these positioning indicators. No surveys, no stuff like that. It's actual money being put to work. Let's get back to the top here. Quickly go through some more that you guys may be interested in. I'm waiting for the daily sentiment index off Fridays, but that basically off the squeeze is kind of back to neutral. Weekly retail put to call, little dip, still in bullish territory. Okay, meaning the retail money has, on a week-to-week basis, focused a lot more on put buying, opening put buying, than call buying. Okay, smart money indicator, that's money coming in on dips, got a bullish sentiment signal there. AAII, which the one way I look at it, a lot of people look at it differently, and already it looks bullish to them. There's one way I look at it, and it's not there yet. Okay, where throughout my career, that reading has been where it usually trades when markets have bottomed, it's not there yet. It's close, but it's not there yet. And the problem is not the bearish side of things. Bears are there. Okay, bears are bearish. So that's why people are taking it already as a bullish signal. The problem for my signal, the way I look at it, the bulls haven't capitulated enough yet in that sentiment survey. Okay, so that's what's kind of holding it up there. You see no signal. AIM and then the NAIIM. Again, you guys probably heard of that, those two before. That's professional money, all right, positioning, the Fidelity funds. So all three you can see there, bullish, fear, greed, run-of-the-mill indicator, bullish, had a little bit of bounce. We spoke about panic euphoria and hedge fund, a smidge into net short territory, not completely there yet. All right, but they're out of long exposure as a whole. Hedge funds are gone. All right, quickly some of this stuff, and then we'll take some questions and all. The sweeper activity as a whole still mixed. Okay, when the squeeze sets up, we see some call sweepers come in, right? Maybe on a decent squeeze day, there's some follow through, there's some pace there, but as a whole, they're playing momentum. We'll see put sweepers and weeklies, we'll see call sweepers and weeklies, and they're playing both sides of the fence. All right, so as a whole, it's mostly mixed spec action, okay? And in this climate, when when the flow is like that, I like to pay attention to short-term sentiment a lot more than, if flow was exceptional. All right. So I'm looking for, it doesn't matter if it's spec action, bullish sweeper activity into bullish short-term sentiment to set up squeezes. All right. Sharp hedgers. So those commercial hedgers still haven't dipped their beak. All right. They still haven't dipped their beak. We've been waiting on it. And also surprisingly was this, the spec positioning, okay, which usually is on the opposite sides of the sharp hedgers, okay, they actually got long net last week. All right, so if you remember, we actually had a bullish signal off that last week. That flipped all the way to bearish now, and Sharpies still haven't dipped in. So, is this a little bit concerning? Yeah, but, they can spit them up into some weakness pretty quick. It won't take much. All right, but this kind of surprised me. SPX Gamma is still in no man's land. I'll probably get another update Monday morning, but hasn't, played a big factor to the downside early on in this correction, and has kind of been in no man's land right now because of these type of market conditions. SPY Gamma is still in squeeze mode. All right, that's different than SPX Gamma. People use it differently too. But SPY Gamma is still in squeeze mode, where squeezes should be pretty vicious and strong to the upside based off SPY. Again, SPY is made up of stocks, a lot different than the SPX options in relation to Gamma. Okay, SPY is each and every one of those stocks that make up the ETF. Shorts, okay, I get an update again probably tomorrow morning, but shorts were shorting. Okay, we'll see if that has changed off the squeeze, but they've been actively short and still short. And one that I don't follow religiously, but it's hard to miss it. That's the only time you end up seeing me talking about it, is insider buying. All right, and I got a chart here. You saw me probably post it on my Twitter. Oh, I gotta go to the next page here. There it is. Okay. So this is insider buying right here. All right. And that doesn't, again, that doesn't translate into an immediate squeeze, but it's a lot better sign, right? As far as carving out a bottom, you're a lot closer to a bottom when you have insiders buying at this rate than if they weren't or they were selling. And yeah, they sold, right? We went over the example Royal Caribbean Cruise Lines, or, you know, I don't know, some of the software stocks in 2018 before the market rolled over. You know, it's not a given that stocks pull back a little bit and insiders start buying aggressively, but they have been buying. And you could see here, right, pretty similar to here. March 2009, that was basically the low. Ratio reached 1.75 in March 2009, okay? So getting close to that number there. Interesting. Yeah, right? Well, that's the beauty, John, that's the beauty of these type, this type of market, okay? Trust me, I don't like to see anybody lose money, but when you get these crashes, corrections with this type of news, like this is something like, even me, I'm an old man in this game, I haven't seen anything like this. With the virus attached to it and the fear of that, a health risk, it can get really scary and you become disinterested. You know what I mean? And a lot of people became disinterested in 2009. A lot of people weren't around in 2009 to even see those lows because everybody was so fearful, including myself. But that's why, it's always important that even if you're not putting money to work aggressively and you're just playing, right? You're playing those sentiment signals, you're staying involved, you're not looking to make a killing, you're not looking to get lumped up. You want to hang around because, like John just said, this is what can follow. You know what I mean? This is what can follow. Doesn't happen all the time in the overall markets, but I'll give you an example, okay? Like 2000, when the NASDAQ bubble blew up, all right? In 2000, the markets overall had a tough way. You went through a really tough period from 2000, 2003, I remember was a good year, but underneath the hood, and it goes back to like stock picking that I told you we'll start to see. If you avoided tech after the tech bubble, if you avoided all those internet names, okay, and you paid attention to everything else that was going on, you had small cap names going nuts, mid cap names going nuts. You had names that end up becoming potential leaders, all starting at $5 to $10, because everybody was just interested in internet names at the time. Everything else got ignored. So, I'm just making the point, there was a huge opportunity under the hood, even after the tech bubble blew up and the markets didn't really come back for a while, So you want to stick around for when this ends, because the opportunities are well worth it. They're well worth it. If they weren't, then it's a lot easier to get discouraged. But things die down. All right. Here's one more. There we go here. Goldman. This is the sentiment indicators out of Goldman. Okay. Let me see. Can I blow that up? Oh, I have to click on it to blow it up. What an idiot I am. All right. So the dark blue diamond is where we're at. All right. And basically you see, right? I know Goldman, I'm not saying you trust Goldman for anything. Okay. But you do have the sharpest minds in Goldman. Where their money is and where their client and public money is two different things. All right. But you can see here some of the stuff Goldman pays attention to on the sentiment side. Pretty similar. All right. Pretty similar. Now, Goldman is looking for lower on the indices. They came out with a note this week. I think Kostic has been bearish. I think he's looking for 2,000 SPX before we bottom. All right. But the dark blue diamond is where we are currently, and you want to see it get to this side here would be extreme bullish, right? So risk off. Okay, everything into the highs was on this side here. Okay, so you see a lot of things, if not there, are getting close most of this stuff was there before this squeeze, so some of it bounced. But what's cool about this is the best part about it. See here, tells you all other times throughout history where we've had some legit sell-offs, where were these indicators at that time? To get an idea. All right, so that's Goldman. But what I wanted to show you more importantly was this. Oh, I think I have it on private Twitter. That's why. Hold on. This is another all clear. Like, I'm not a big Vix guy. I'm fascinated by 50 cent, and that's the extent of it. Okay, I'm just not too familiar with Vix. I haven't, I never really used it as a signal. But again, from my experience, what Vix looks like when the dust settles, right, and the coast starts to clear up a little bit, okay? A couple things usually fall into place, okay? This is the Sharpie, right, COT, the commercial hedgers in VIX futures. Just like we're looking at it as a whole, risk on, risk off, this is strictly VIX futures, okay? So they get long VIX futures into weakness, right? That's what they did here. Okay, that's why it's highlighted in red, right? And they did that towards right into the start of 2020, at the beginning of the year. Okay, so that you can see, right? Here's 0, here's net long contracts up to 200, here's net short contracts. Actual money positioning, guys. Okay, they got long when VIX, nobody wanted it, and VIX was going to 0, was the consensus. Okay, that's when they do buying, and they did buying in a big way, right? Here's what they've been doing now. As VIX has accelerated to the upside, similar to what 50 Cent did, taking profit, you see little by little, they've been taking exposure off, right? All right, and when markets bottom, even just temporary bottoms, intermediate term bottoms, but usually when markets form a bottom, you see them get net short VIX futures, okay? Usually, and that was like here, that was here, okay? And that's what we're kind of looking for. You can see by that makeshift of an arrow, we want to see them get into that negative column. All right, sometimes it's done off a bounce. It doesn't have to be into the lows. Market could bounce, and they do that, and it's confirmation they do that. But that's one of the things where I'm paying attention to out of VIX as kind of an all clear sign over the intermediate term. All right. Another thing, you guys probably, a lot of you probably follow this already, the Vix term structure. Okay, when you get into all out panic like we're in now, all right, just to keep it simple, I'm the last person to give you a lesson on VIX. I admit that from the get-go, but just a simple way of looking at things. If you guys want to know how I look at it, okay, you see this? You see the slope of this? This is panic, okay? That's volatility to the max. A lot of times I know people go right into cash. The first signs of seeing that, okay? But when you start to see the dust settle, all right, and things get a little calmer out there, what you're going to see, okay, is, and this is what a healthy term structure would look like, the opposite, right? So, well, that's not a good one, but you know what I mean, right? So it would higher lows, okay? Higher lows, higher lows, higher lows, higher lows. That's what a healthy term structure would look like out of VIX. And that's kind of like bull trend is the takeaway for that, for the overall market. All right. So the first signs we would see of that, you would see this lower and this month higher. Okay. Breaking up. You see how it is now? How it's basically lower lows, right? Lower low, lower low, lower low, lower low. So you start to see flatten out and higher lows. This one get above that one, that sort of thing, okay? And that's one sign of the VIX that things are calming down. Okay, things are calming down. So those are two things I'm keeping an eye on. This is another look at it, contango. You could go back through time and see, when it's looked like this. This is pretty bad though. This is another look from COT data of dealers, speculators on VIX futures. Okay, so the white line, speculators. Yeah, the white line would be up here. I think is speculator dealers. No. I'm confused. Forget that. I don't know. I'm confused. But this is another look at the VIX futures dealers and speculators. There's a little different look than I look at. All right, but you get the gist of it anyway. The white line is the specs. That means they would be buying. Oh, okay. No. That's VIX selling. Yeah, so you want green bottom, white higher. That's it. All right. I got a little confused. You want the green lower here, white bottom as a sign they're shorting VIX. Whew. Right, you want speculators, exactly, all in, and dealers short. That would be on the bottom. I always got confused by this chart. That's why I like looking at it the other way. We look at it. I always get confused. All right, and I think speculators takes in large speculators as well, not just small speculators. All right, but that's it. Anybody have, let me pull up some questions here, and then we'll start, we'll talk a little bit about names and strategy and the whole 9 yards. Hold on, let me blow up the questions. I'll put ES in the background so we could take a peek. All right. Anybody, before we get into names, does anybody have any questions on anything I went over? Okay, especially those of you who are members, please. Anything regarding strategy, sentiment, that sort of thing, let me know. And then we'll talk about names. Do I think Nat saying, do I think gamma exposure is useful when it comes to flows and sentiment? Yes, but Nat, we're in a really weird time right now, to say the least. You know what I mean? So things that could be quite helpful in normal market conditions, Nat, sometimes when you get into this type of market, this type of climate, just don't become as useful, because they get thrown out of whack. But yeah, I like SPX gamma exposure. I like to know where that's at more than not, because it sets up well with sweeper activity and sentiment. And normally you get your run-of-the-mill corrections, right, without any virus attached to it. But usually they set up well when they all line up. You got gamma lining up, you got sweepers lining up, and you got sentiment lining up. There's usually some big-time squeezes to follow. This situation we're in now, SPX gamma is so out of whack now, and so far away from gamma neutral that, the way I use it, it's useless, right? Other people use it in a different way, and they still find some edge out of it. But the way I use it for flow and sentiment, like you're saying, it's kind of had no signal for a while now. The Gamma Gang, they have a weird strategy going on. And I basically, as far as I kept up on it, they're shorting VIX and shorting the market, if I read it correctly. I think that was the interpretation I got. But Sean, they can make smoke come out of your ears. You know what I mean? That's why I just use it in simple terms. you know, but they use it a lot for those type of, you know, premium selling and strangles and that sort of thing. You know, they find a lot of use out of it. I just, you know, you don't want to put, Sean, too much, you know this, right? We've spoken about this. You don't want to put too much on your plate at once, you know? If you want to learn more about it, take baby steps, kind of do it on the side. But it's confusing enough, this game, especially now. Let's see, a good way to view this is to look at VIX versus VIX 9-day. Exactly. That's exactly that was what I was trying to explain to even some of the, you know, newbies out there. I don't know if they have access. Maybe on VIX Central you have access to that option, different time frames on VIX to adjust it that way. But I was just giving the generalization of the slope in VIX, you know. So yeah, and those of you who are members, you know, you don't have to rack your brain, okay? A lot of members are interested in this stuff, you know? So that's why I've had to cover it more. A lot of members are interested in following this stuff as much as my degenerate ass is, you know? I didn't realize there was a lot of more degenerates than I thought out there, put it that way. Okay, so that's why I try to cover these things, you know, in depth. But, you know, if you're a member, I try to make it as simple as possible for you, you know? See the highlighter, yellow, neutral, green, bullish, pink, red, whatever, bearish. And, you know, you're looking for your short-term trader, you know, you're focusing on this. You're a swing trader, you know, you want to focus on this. So, you know what I mean? Flow, there's signals out of there. So that's why I try to keep it as simple as possible, even though I discuss a lot of it, you know, individually, because people are interested in it. You know, people are interested in it. And yeah, if you're passionate as far as the market is concerned, as like I am, you know, sentiment, something you're probably going to develop a passion for, because it's what makes markets, you know? That's what the markets are all about. More buyers than sellers, and a lot of times, you know, when there's a lot more sellers than buyers, that's when there's huge turning points, and we want to pay attention to that. What do I do with your questions? Hold on, I lost your questions. Bear with me. I still am not as good as I thought I was navigating this. Uh-oh. Did I X you guys out? No. Phew. All right. I still got to get you. How's this Zoom? This Zoom is a lot better, right? You guys like the Zoom better? Way better, right? What I got to do is I got to try to figure out just a little better way in regards to the questions. Right, long Zoom, short go-to. We'll talk about some names right after this. Audio is much better. That's what I figured. You know, I got a decent mic. You know, the computer has no problems. That's why it doesn't make sense. My audio was so bad. I don't understand that. What 3 books or things would you recommend following, reading, or learning about these concepts? I would take baby steps. You know, are you talking about that as the market as a whole, or you're talking about the stuff we're going over now? You know, I would tackle one thing at a time, you know, one thing at a time. Yeah, like books, you know, the books, I don't know, for me, they never did anything. You know, I would look toward books for motivational stuff and all. Be good, Trey, stay safe. I would look to books for motivational type stuff, you know, to keep my head in the right stuff, just stuff I was interested in, like, what was that? Stock Operator, Tales of a Stock Operator. What the hell is that Livermore book? Whatever the case. But, you know, the stuff you're going to learn the most from is all hands-on. All hands-on. You know, all hands-on stuff. So you gotta be able, if it takes you risking a little bit of money, don't worry about how much you're gonna make or lose. You know what I mean? Stay small. play with a little bit of money if that's what it takes to keep you involved. But the most you're going to learn is by just trial and error and keeping your eyes open. And your goal is to not make the same mistakes over and over again. All right? If you make the same mistakes over and over again, you got nobody to blame but yourself. But you're going to learn a lot in this game just by trial and error. You know, like a little rule book that I got mentally in this game, you know, is all from trial and error. The reason I don't play earnings is all from trial and error. You know, so if I know that earnings were net a losing proposition to me, and I continue to play earnings, you know, there's no one else to blame. You know, these are things you got to do if you want to find success in the game. If you're doing it for entertainment purposes and enjoyment purposes, that's a whole different can of worms. You know, but the bottom line is the most you're going to learn is by just keeping your eyes open and paying attention to what's going on out there. Yeah, everything you learn, you're constantly learning in this game, especially this game, you know, now more than ever, this game changes, you know, like for example, Gamma wasn't, you know, Gamma didn't even exist, right? Back then. And now, you know, now it's been playing a major part in price action. You know, algos, machines, programs, all this stuff. You know, like for example, like, you know, people laugh if you show them CTA exposure and stuff like that, like all the stuff McElliott looks at on a day-to-day basis at a Numora, right? Like at first it sounds foreign to you, and then you get all the keep it simple people crack their jokes, but you know, McElliott's got a rep now for a reason. That stuff moves markets, you know? It's how the market's wired. If CTAs are all in and, you know, they're programmed and looking at certain levels to take off exposure, you know, it's going to add to the selling. Wouldn't you rather be aware of that? Even if you're not taking action on it, wouldn't you like to be aware of that information? You know, of how they're positioned, what end of the spectrum they're positioned on? I would, yeah, I would. Again, it doesn't have to be that it's all actionable stuff. It doesn't mean you have to make money. You know, some of the best signals, I'm going to sound remnants of a stock operator. That was the book I was talking about. You know, I just like the book. I don't know if I learned anything from it. You know, I just like the book. But I'm going to sound corny right now. So let me just put that disclaimer out there, okay? I forgot what I was going to say. Holy cow. Wow, my mind's mush. Some of the most important signals for me, okay, are stuff that I don't even make money off of, but prevent me from losing money. Does that sound corny? It may sound corny, but I'm being honest with you. Signals out of sentiment that I didn't short off of. In other words, I didn't place a trade off of, but it made me stay in cash for. You understand? That's an example. You understand? So a lot of the best signals out there are stuff like, you know, I didn't make money, I didn't take action and make a bet on, but it protected my shit. Right, and exactly, Sean, and keeps me in the game. You know, you want to hang around in this game. The more you hang around, the more you learn, the more bullets you fire, the more mistakes you correct. If you can hang around in this game, you're going to be able to figure out at least a strategy that allows you to win more than you lose if you apply the right money management. Okay? That's a promise if you hang around long enough in this game, if you allow yourself to do that. Now, that may not be enough for some of you. You understand? Did you hear what I said? If you hang around long enough in this game, you're not going to find that unicorn that tweeps are looking for. I'm not talking about that. But you're going to find something, you're going to be like, oh, shit. All right? If I do this, okay? And I don't pay attention and focus on the losers, and they're just part of the game, and I'm gonna have more winners than losers, and I manage my bankroll the right way, I can actually make money in this game. You know, if that's your goal, you know, the longer you hang around, you can find that. Do you do? No, I don't. I don't do any automated stuff. If you knew who you were talking to, you'd understand exactly why. I'm lucky I could turn a computer on. It wasn't too long ago. You want to laugh at this? Nick, I don't even know if you know this, but it wasn't that long ago, guys, that I wasn't calling in trades. You know what I mean? Like punching in trades on the computer is something that took me a while to really get comfortable with. That might sound, that likely sounds extremely ridiculous to you guys, but you know, technology and me, we don't go too well. You know, we don't go too well. Yeah, and that's probably what it is. I'm so used to it one way. But you know, everything, punching numbers, you know, I fat finger stuff. I leave, you know, when I was a broker, I used to leave something stupid like my rep number out, and then we couldn't find the trades. It always led to a debacle, always. You know, always led to some sort of debacle on my end. How do you ease into learning what you do here? The simple way, here's what I would recommend, okay? The only way you're going, if it's learning you're interested in, okay? My recommendation would be to start off at wallstreetjesus.com and you go to this strategy section, okay? And while you're sitting home in quarantine or sitting on the bowl doing your thing, you pull these up and just read them. They're pretty quick. All right, just basic idea of why we follow certain things we follow, the terminology, how we use all this information. You know what I mean? And you'll get a basic idea of what we're looking for and why we feel it works. All right. And then the easiest way, you know, if you're a member, is to just pay attention to my commentary on the flow, and whether you're trading it or not, you know, pay attention to it, watch it. You know, even if you didn't put a trade on, you know, in a certain name that caught action that you liked or whatever the case may be, even if you didn't react into extreme bearish sentiment, okay, because you had a bias, pay attention and acknowledge, you know, what took place and why it took place. You know, and trust me, little by little, you're not going to get a handle on everything, but little by little, you're going to understand the reasons why we look at this stuff. You know, it's going to make sense why. And then, you know, time is everything. As you become more comfortable, you're going to know exactly what you want to look for your style of trading. And, you know, it's either going to work for you or it's not. You know, but that would be my advice. My first thing I would do is go to the Wall Street Jesus site and you know, look over that stuff. And then, you know, the 3 free day trial, you're not going to learn much in 3 days, but you'll get an idea of what we do every day. You know, and it doesn't cost you $1, and you don't have to put a credit card or anything in there. Where am I? You know, you don't have to do. Right here. If you go to Wall Street Jesus right here, this. Okay. Yeah, I'm on audio with this screen showing the Niner screen all day. Okay. But as the flow is coming in, anything that's noteworthy, you know, whether you're going to trade the name or not, whether you care or not, I'm going to let you know about it. You know, whether you react or not. You know, so in the room, you know, it's easier to get my point across via audio, but, you know, if you're not in front of a desktop, right, or it's, you know, you're looking for a cheaper route or anything like that, private Twitter, which is included in the premium package, by the way, but private Twitter, we spun off into its own entity as well. I got to do this. And you could just have access to private Twitter. And I try my best to put, enough commentary to get my point across there. For private Twitter, you go to products. Anytime Lucci has a course or something like that, you go to products. And that's where you get private Twitter as well. You put your handle here, and private Twitter, there's no free trial with private Twitter. It's $59.99 a month. Okay. But if you, because a lot of people don't realize this, if you get, this is the premium package here, this is what the room looks like, you get private Twitter as well. What's a nine? Yeah, a niner is DeMarc, sequential. Basically, in simple English, an exhaustion signal. Okay, that's how we use it. Here's an example. Okay, see here, niner. Okay, I'll tell you how I use it. This is exactly how I use it. Ready? Pretty simple, the way I use it. Some people use it differently. Okay, how I use it is this: niner. Okay, and you'll hear me scream it out on audio or post it on private Twitter. Okay, that's a sign of where you would look for selling for signs of exhaustion, that the sellers are getting tired. All right, a lot of times, even when they fail niners, okay, what you'll see is some stability there, like this. See how it formed a bottom there where they couldn't press it lower? Okay, so the way I like to use it is if I see sweeper activity, if I see an uptick in sweeper activity coming in off that niner, that's confirmation that, for me, that they're positioning for a squeeze. Makes sense, right? So again, if you're not getting wrapped up into the whole Tom DeMarc thing, because that's another thing like Gamma that you can really, it does look like Madden, you're right. Similar to Gamma, if you get wrapped up into Tom DeMarc and strategy and all that stuff, you'll have smoke coming out of your ears. Okay, but the reason I follow it, it works really well, extremely well, especially for intraday opportunities with flow and sentiment. Okay, for the simple reason, there it is, right? It doesn't get any more simpler than that. Okay, so let's pretend the market's open, right? It's Monday, early morning. All right, we got a niner here. Let's see if sweepers grab the ball. Let's see if we can see some buying here. Like the match for a little squeeze. Right? And I'll be like, all right, Apple weeklies, CRM weeklies. Ooh, there's a little spy bet there. All right, looks like they're positioning for a squeeze here, short-term bounce, and some weeklies. All right? You get long. You're not getting long up here now. You're getting long off that niner where flow's confirming. And now, this is the trick. You navigate here via a few ways. You scalp it and take what you got right there, boom, right? You raise a stop, or you play for the big hits, right? The big, large reward type plays, and you just keep your stop where it is, looking for that larger move. In other words, let's say you follow Fibonacci's or Liberace levels or Ichimoku clouds or anything, right? And your thing says, all right, I'm showing here at 24.98 is where this thing could get to, and then find some resistance. You know, maybe that's your target, right? So you want to keep your stop wherever it is, and you're looking for 24.98 because your Liberace told you to. Okay, worst case scenario, you get stopped out break even or small loss. But your upside, one upside will make up for 3-4 of those. So it all depends on, you know, who you are and how you play this game. You know, who you are and how you play this game. But what I do recommend, especially when you're first trying it out, you don't necessarily want to be too tight, especially if you're not using the flow. So in other words, let's say you play off this niner and you buy this bar right here, okay? you don't want to keep the stop right here, because sometimes they bounce immediately off Niners, or sometimes it's a process. Okay, it's a process. So you want to give, depending on what type of upside you're looking for, you want to give it a little bit of room, at least initially. Okay, and then you can raise your stop if you want, right? You start seeing a push higher, now raise your stop to break even. So that's just a few ways of how to play it. But for me, like, I don't play, unless in this market, I'm not playing a Niner unless there's sweeper confirmation. Okay, why? Because, if we're in liquidation mode, right? Like, you'll see, right? When in this type of market, you'll see there are days where we're just selling and it goes right through Niners, right? It happens, okay? But I can promise you one thing. There are no sweepers at those Niners that they're going through, right? And you'll hear me say, there's no sign of sweeper, no sign of buying here at all on my end. You'll hear me say that a lot, right? Sometimes there is a little bounce. Sometimes it goes right through the Niner and keeps selling. Okay, so that's why I use sweeper confirmation. It's, at least it's something out there physically that's signaling a change in trend. I don't use, it depends. I won't say I don't use it on names as much, Hussein. I don't use it on names as much intraday. I know people who do in some of the more active names, but I don't as much. Okay. Now that's a good question in regards to like ES. Upside Niners, I'm not shorting. You guys know that. Okay. I would pay attention to the flow if you are shorting, most importantly of everything. But for me, upside Niners are profit targets. You understand? So let's say I bought off this Niner and it runs into an upside Niner there. That's a place where I probably pull the plug if I'm looking to get out. So I don't short off upside Niners. A lot of times just raising stops and stuff like that. But the flow usually does a good job. The sweeper activity, not blocks. The sweeper activity usually does a good job of signaling whether there at least will be a pause around that Niner or not. All right. And during market hours, after hours, I wouldn't, well, there's no flow after hours. So good call, John. I wouldn't buy into an upside Niner. He's right. He's right. Good call, John. John makes a good point. I wouldn't buy, be good, Sean. I wouldn't buy into an upside Niner. He's right. Exactly. That's the main takeaway. You're right. See, more than me. He's right. All right. And, during market hours, one, there's no sweeper activity aside from market hours. But you see here, like, here's a good example, okay? This is where the market squeezed and we saw all that flow and all the garbage, right? Okay. So, this Niner came pre-market, so forget that. But you had a Niner here, ran through that, Here was a Niner, a little bit of pause. You know what I'm saying? But a lot of times when you see this, where they just storm through that upside Niner, they're probably sweeping the daylights out of calls there too. So you're getting that momentum is just still going, They're not getting tired, right? It's an exhaustion signal. They're not showing any signs of exhaustion there. SDC, I wasn't paying attention to Niners. Let me see. You keep bringing that up. Let me see it now. Hold on, I'm curious. Thursday. This is Thursday? Oh, yeah. Wow, Jesus. Oh, so I see what you're saying, right? Oh, you know what's funny? Hussein, that's where I sold it. That's where I sold it. That's where I got out. So don't feel bad if you did. That's exactly where I sold it. I think that was Thursday, right? You also sold it on the Niner? All right, so don't feel bad. We didn't know that they were going to continuously sweep it. But here's the thing. If you want to at least give your best attempt to avoid it, okay, Hussein, what you can do is raise a stop. A lot of times you're going to get clipped, but sometimes it will allow you to stay in names that you normally wouldn't stay in. You know, you could use an ATR stop or just a mental stop that you're putting in, you know, according to your technicals or whatever the hell you're looking at. You know, so that's the only thing for me that's kept me in some nice winners. Otherwise, you know, I got the same problem. Saeed, what are you saying? 15? What's 15? I don't see your other question. These questions move too fast. That's the problem. Oh, okay. Yes, I have this screen on all day for ES, and we'll look at names during the day. But all day, this screen is on. A lot of times I use this screen for you guys. It's just a lot cleaner for intraday. So this is the screen on I have. This is the screen I have on. I'm tongue-tied already. I'm taking questions in the Zoom chat right now. This is the Zoom chat. You will see this intraday, right? On what I'm talking about now, what he's referring to is this. I'll show you, watch. No, wait. Oh, close call. Hold on. So this is what the room looks like for those of you who are asking. Okay. All right, so this is the main chat where everybody is sharing ideas. Lucci talking about what he's shorting and doing all that jazz, what calls and puts he's writing, and what he's trading. Everybody discussing what they're trading during market hours. Okay. Then you have this, which is just my commentary. So during the day, you're going to see flow here and my commentary. Okay. And I'm on audio and video where you have a little window that pops up like this. I wonder, can I do that now? Yeah, let me see. So it would look like, there it is. So you click on that live button and you can make it bigger, smaller. You could take it off into a completely different whole screen. You can move it around. You know what I mean? So this is the room you guys are asking about. And this is where the alerts that go off, automated alerts go off as they're coming in. Okay. And you can search it and stuff like that. All right. But that's how it looks. And we have other rooms, you know, that people shoot the shit in and stuff like that. Let me get this off here before I forget it on. All right, and there's a 3-day trial. All right, anybody want to talk? Yeah, let's talk about some names and then we'll call it a night. We'll go relax. We got a big week ahead of us. Every week's been crazy. This week is going to be interesting, no doubt. All right. By the way, anybody who's interested about learning a little bit about what the Fed's doing, my Wall Street Jesus Twitter, I'm going to send out a link. The guy breaks it down in simple English if you want to understand the major measures that the Fed took in this and how it, you know, relates to the market. So I'll post that I'll post that when I get out of here. All right, so let's get to some names. Yeah, work you know, I've been a fan of this name. It's from time to time saw some nice flow. If we were in a normal market, I'd probably be sitting on a nice position of this. Just because I like the name. It got beaten up, and you know, there's been some decent flow in it from time to time. But because of the market, I don't have anything to show for it, you know, as far as a position. But on dips, I think you got to keep an eye on sweeper activity every time this thing dips. You know, every time this thing dips. Yeah, you had a niner right here that a lot of people were talking about, you know, that set up a nice bottom, right? And now, you know, you're watching out for a potential upside niner there. But, you know, on dips, this name, you know, has been nice of late. You know, it's got they beat this name up pretty good post IPO, as you guys remember. And it took a while for this name to get back into favor, and it's kind of a stay-at-home play too with this whole coronavirus stuff. So it's no Zoom. And by the way, this thing catches 2-3 missiles a day, this Zoom. It's amazing. A lot of us, including myself, here's where we bought the Zoom. Right? And then sold into this rip. And this thing just keeps going. You know, keeps going. And the flow. No, not save. What am I doing? The hell am I doing? Hold on. I'll show you the action it caught Friday. Here it is. Let me minimize it a little. So this was the action on just Friday. This thing catches action every day. So here, Zoom, another good looking sweep, April 9th, 152.5, 784 grand. Yeah, right there. Opening bet. You know, this thing, look at these sweeps. But it's nothing new now, you know? This name has been in play I showed you where I owned it, you know? So it's been in play for a while. You know, been in play for a while. Here you can see, this is the intraday flow. Right off the open, they just came in buying the thing, and then a couple in the afternoon. Look at this. This tells you a lot here too, right? Watch this. I'm still not too good with the pen, but eventually I will. So look where you see where it actually really started to heat up. Like, you know, you could see here's probably a day caught some nice sweeper activity. You know, you could see where there were isolated buys, but look at the swelling in call volume, like late January. Crazy, right? Crazy. So yeah, it's not new. It's old news now. You know what I mean? It's old news. She still moves off sweeper activity. I don't know how long that's going to last. Like, there's still momentum off sweeps where you could day trade it, even though it's long in the tooth. But it's been hot, man. The flow's been hot too. This was interesting action. I don't know if anybody day traded it. This name, RNG, I can tell you a story about this name. This name caught the first, when under the radar names catch sweeper activity, right? That they're really not too liquid. There's not a lot of option volume in. You know, when you see those type of names catch aggressive activity, you got to jump on them and jump on them quick, because they end up being the next big winners. A lot of them. All right. So this RNG, you could go back and search Twitter, just so you think I'm not lying. Okay. You got to go back to here. I think it was under 100. I think it was coming out of this. It must have been coming out of this. Okay. So this is where roundabout, give or take, I could be off a month. Okay. where it caught initial activity, somewhere around here, coming out of this, okay? That's, in other words, where it first started to catch sweeper activity. I never saw any sweeper activity in RNG prior, ever, okay? All of a sudden, it started to catch some under the hood, under the radar aggressive sweeps, okay? So what that tells us now is that, you know, they're professional eyeballs on it. You know what I mean? Somebody is taking a notice to this thing. At the time, I never heard of them. Didn't know what they do. Now everybody knows about them. Everybody knows what they do. You know, Ring Central. It's a virus play, antivirus play. And, you know, look at it now. You know, so you just had this thing. They hit it on Friday, and this thing exploded on Friday. Exploded. And this is what I mean about stock picking that I'm kind of optimistic about. We're going to see more stuff like this, right? They're not bombing everything in the market, but they're going to find a Ring Central. You know, they're going to find hot growth names that are in play that got, you know, sold off with everything else, basically. So this is what it looks like. Hold on, let me do this so I can get back to. This is what it looked like intraday. So you can see this is on a 1 minute. All right. So this is the move of the sweeper activity. And this is the action it caught. It caught legitimate action. It caught legitimate action. Let me find it. All right. So here's the first sweep. 8:59 April 230s. Look at the wood. $12. 2 o'clock that went off. 2 o'clock. So where's 2 o'clock on here? 15? 15? Wait a second. Yeah. No. 14. My army times. Right here. Look where this thing caught a sweep. All right, just so you get an idea. That's where it caught a sweep. Okay? And this thing doesn't catch sweeps. Doesn't catch sweeps. Okay? Period. In general, let alone large sweeps. Doesn't catch sweeps. So right there, that, you know, that sticks out. Okay? Then he comes back and adds the 227 and a halves. Right? Does that came next? Yeah. He adds the 227 and a halves. Like 10 minutes later, opening bet, 300 grand in premium, sweeps multiple exchanges, aggressive, okay? Then these are the orders that followed after that. Then you have, you know, RNGs at highs, RNG sweep again. Here's another 300 grand, all right? And then, you know, RNG, sweepers running over 3 times normal flow. And this is the lift right there. So they started hitting at a little after 2, and they got aggressive, and that's where you get that big move, and then ultimately it faded last few minutes into the belt. But a big move, big move. Big move. All right, so that caught action, but you want to, you know, you want to pay attention to where they catch action. You don't want to chase, especially in this market. You know, you want to be around that area, close to it. What other flow I got on here? Anybody have any other names? eBay, you know, it's not a sexy name, but I would keep an eye on it. You know, somebody's building a position October calls. They probably come back and add to it. eBay can catch a lot of flow. So I would keep an eye on it. You know, I would keep an eye on it. Oh, I like that name. I like that name. DOCU. I like that name. This is another name, you know, in the 30s that caught action, and I had no idea what the hell it was. But it's just another one of those names, you know. So, I mean, if you want to play in a conservative way in this market, You know, you're looking for those pullbacks because this thing can move around. You know, that's the problem with this market, guys. Okay. Let's say a DOCU. You come in, you're gassed up on it, right? It caught some flow and you buy it at 85. This thing can trade to 79 like that one morning, right? Down $6 and still look great. Like a burp on the chart, you know? So the way to combat that, what you want to try to do if you're interested in the name, that's where you want to look for your entries. You know, it takes discipline. Sometimes you're going to miss some stuff. You know what I mean? But you see, like a day like here, wash, you know, you want to be there. That's where you want to look to buy. Wash, you know, that's where you want your entries. You want to try to avoid in this type of market buying the highs, because in options, it can hurt, right? If you bought this, ultimately you may be okay, but over the short term, you know, you're down a cool 88. You know, at the lows of this thing, you were down a cool $10, which is nothing in this market. Nothing. Nothing. So, yeah, that's the only thing I would add to playing some of these things. But yeah, I like the name, and yeah, nothing spectacular, but she's been catching some flow again recently. mRNA has been one of the biotechs that we've seen a lot of action in. You know, kind of already had its pop and it's digesting that. They were buying it pre-pop, but it's still catching flow. Same thing, if you're interested, you're probably better off buying down days than chasing up days. But she's still catching bullish flow, if that's what you're asking. The other name is Gilead, which is nicknamed the Widowmaker, and is a real tough stock. You know, you can't buy, if you buying Gilead green is suicide. The last thing you want to do is chase Gilead green. All right, but so dips, those are the two biotechs. ABBV, we've seen flow in, had a nice little rally last week. We saw flow down here, you know. So that's that, again, not to sound like a broken record, but that's what I'm optimistic about. That's what I'm hoping for. No matter what the market does, we're going to see them start. Our watch list is going to broaden out. You know, our watch list is going to broaden out. Like right now, you know, prior to last week, the stuff catching nice action was slim pickings. You know, you had McDonald's, right, that we spoke about, Trip, Take Two, right? So it really slim pickings as far as what names were catching action. ATVI. But now I think we're going to start to see more of that. We're going to have more plays in individual names. I'm hoping. SQ. Let's see. Wow, yeah. That's a nice bounce. Niner. Super Scion Blue. And bounce. Names like that, I'd be a little careful about. You know what I mean? Names like this, I'd be careful about. Yeah, sometimes the squeezes can last a lot longer than you think because there are people shorting into this. So they get squeezed. But for me, I like to play them off the initial activity, Brian. You know what I mean? When they first see action, that's where you want to pounce. And, you know, then I'm looking for new stuff. I don't like to stick with them. So I watch like this and SDC. For now, anyway, I wash my hands with. You know, I wash my hands with. You know, until if they pull back and then catch flow again a couple of weeks later, whatever the case, that's a different story. What are the names? Roku. We haven't, flow-wise, we saw a couple spec sweeps there, but it looks interesting. You know, it looks interesting. I don't know why this got clobbered. I thought this maybe would see some stay-at-home money, right? Like Netflix. But we haven't really even seen the flow there yet. So let's see. Let's see. Like Netflix too, that's a nice name off weakness when it catches sweeper activity. That's been a nice stock. You know, Tesla, all those names off weakness have been nice trades. You know, nice trades. But again, the key word is weakness. You hear me keep saying that? Weakness. You know, I wouldn't be willing to chase anything right now. I wouldn't be willing to chase anything. Because again, we're seeing selectively some signs that they're doing some shopping, but they're not getting aggressive and buying everything, you know? We haven't seen that yet. Maybe, you know, that's not too far away. Qualcomm caught a little bit of action. I think it was Friday, late last week. But that's a nice spot there, Qualcomm. So I would definitely keep an eye out for sweeper activity if you're interested in this name. This is a nice spot. You know what I mean? You're not chasing this yet. So if you like the name, I would keep an eye out for sweeper activity. And if you like the name already, press the button. You know, that's the thing. A lot of these names have been washed out in a pretty big way, okay, to where at the least we should see some stabilization, you know, like I showed you on the chart earlier I was doing. So you get, you know, kind of like this. Right? Not an exact quote, but you know what I mean? It's got, you know, a little upward bias possibly to it, but it's more chop, and you kind of want to be there on dips. If you like the name, you don't want to chase the highs, especially in options, short dated options. You know, so you kind of going to have, we have the capabilities because of sentiment like that. We have the stocks should start doing that. Even if the market goes to test lows, there should be names out there that outperform. You know what? That's the point I'm trying to make. Even if the market really hasn't gone anywhere, you should be able to see some alpha in more names. That's what it's looking like. All right, but again, any name you like, to keep it simple, any name you like, okay, just wait for the pull, wait for fades, wait for pull, it'll come. You know, you see a market rally like it did last week, right? Up till Friday. And you forget that we were in a market that goes down every day because we were up 3 straight days. But you don't want to buy into that. You know what I'm saying? Wait for the pull. It's coming. You know, and intraday, the same thing we want to get in the habit of. We don't want to buy late into squeezes. We want to buy off fades, right? Where they reel in shorts and they catch them. You know, then the market rallies, they look to reel in bulls and they catch them. You know, so that's what you got to kind of like keep on top. We got to keep on top of ourselves with that, because in the heat of the moment, easier said than done, right? It's not too easy. Easier said than done in the heat of the moment. Cuervo caught a big bet. That's a name on my watch list. Definitely interested in. And, you know, Cuervo always catches big bets. Like Cuervo never catches a small bet. That never happens when it catches action. But this, you know, Cuervo was the 5G play just a month ago. Like everybody wanted to be in this name for 5G. Everybody. So now that whole rally is gone. Right back to where she started, right? Off this earnings here. Yeah. And that's the other thing. We got earnings coming up. We'll talk about that next week as earnings get close. I think earnings season is going to bring an opportunity in itself for us. Because again, a lot of the stuff we're going to hear out of earnings season, like the unemployment number, is factored in. You know, it's factored in already. Yeah, Cuervo is a buy off that bet. If you like the name already, you know, you could also take the approach, you watch it and see if they hit it again and add to their position, because ultimately those are the strongest plays. you know, in this environment. But if you like the name already, there's nothing wrong with starting a position here with time. I think, what they play in Corvo? January? Anybody remember the month off the top of their head? May. So not as much time, but some time. April, May, 2 months. May. Oh, I thought it was further out than that, Ryan. It's May. That's kind of like the in-between, you know? Like, you want to be quick, or me, I'm saying, I want to be quick, or I want to have more than enough time that I can add, or maybe it's June, right, Ryan? I can't keep track anymore anyway. I'm dizzy. Either or, but the point I'm making is that I either want to be really quick or I want to have a good amount of time, you know? So I don't have to worry about the day-to-day volatility and gyrations. I can add to it in weakness. Microsoft always catches some sort of flow. You know, Microsoft's a tough name to, for Microsoft to have a strong signal off sweeper activity, they got to come in and tattoo it. June, thank you, Gordon. It's June, Ryan Corvo. So that's an extra month. That's not too bad. So Corvo, they played June's, and it was a $1.2 million sweep. Thank you, Gordon. All right, but yeah, listen, all these names, somebody's mentioned CVS. Let's see where, I like this name, CVS, too. Yeah, that, you know, looks good. You want to see some heat, flow-wise. But a lot of these names are just laying on the floor dead, even after a squeeze. So, and CVS, aren't they doing well in this virus thing? Aren't they like mini hospitals now? Everyone's for August, right? It caught some action. Wait, a risk reversal? How come I don't remember that? CVS? You sure about that? Yep. AMD, you know, Joe, same thing. You know, you want to see some heat come into it to have a strong signal off flow. But, you know, usually they do well, especially off weakness. No, AMD is a hot stock, you know. AMD, like, it's not easy to hold that thing down. They sold puts to buy call spreads. In CVS, I don't remember that. Clean? Was it clean? Might have been tied to stock, Kent. No? I don't remember that. Did you see that out of the steam room or somewhere else? Ah, somewhere else. Forget it. No offense, Kent, but I thought maybe I forgot. It might have been stock replacement, Kent, because I remember those bets. Here's one that caught a risk reversal and had a real nice squeeze. Home Depot, right, into the lows. But see, unlike the other ones, this is a bit of a chase up here now, you know? This is a bit of a chase. You kind of want to, you know, you kind of want to buy them when they're dead, especially if you like the names. STNG, I wouldn't say hot, but it's been catching some flow. The CEO bought calls. Prav. The degenerate CEO bought some calls again. But not hot like we saw it the last time. You know, they hit it pretty hard the last time. But it definitely bullish flow. Definitely bullish flow there. These things, too, might be the first to start turning. These are the shippers. They were showing signs. Look, remember we were talking about the Baltic Dry Index, all that stuff, and nobody knew what the hell was going on, right? Plummeting. It's almost like they knew the virus was ready to destroy everything. And these shippers were the first to go south. When was this exactly? Look at this. At the start of the year, it topped out and just never acted well. Look at this. Every rally sold. You remember, Ryan, we were talking about the Baltic Dry Index and all that stuff, and we're saying they're tanking right now. The market's making new highs. You know, nobody, what the hell's going on? And then the virus talk started up, but didn't really affect the markets. You know, started up in China. And then it's almost like, you know, the market's amazing, man. I'm telling you, the longer you're in this game, you'll see. The market does some shit, weird shit that, you know, you almost think it's like, you know, someone's pulling strings somewhere. You know, stuff like this, selling off when the economy's booming out of nowhere. And then all of a sudden you get a virus that turns the whole world upside down. You know, I told you guys the story, 9/11, the airlines were getting lumped up, hit over the head before 9/11. Nobody knew what the hell was going on. 9/11, the airlines, all of a sudden they were selling like, yeah, oh, I'm not making it up, Joey. Google it, you'll probably find it. Somebody got locked up, by the way, for insider trading. How about that? I remember hearing. Probably Bin Laden from his bunker. Son of a bitch. Yeah. Yeah, probably. You're right, Saeed. Probably had a Gitmo. They got a heads up and they traded. But all kidding aside, no conspiracy theory or anything. The airlines started tanking. And here's the thing. And this is what I remember from it. Otherwise, I wouldn't have noticed it. The puts, the out of the money puts, way out of the money puts were catching action. That's what people started to notice and say, like, what the fuck is going on here? The out of the money puts. Here, Ryan saying he saw a video that there was a player in Europe buying puts on the airlines prior to 9/11. That's probably the guy that got caught that I was telling you about. There was out of the money put buying in the airlines 9/11. I know for a fact before 9/11 happened. Wacky stuff. But, you know, my point I'm making, we all know the market is the best forecaster out there. You know, it overreacts a lot, right? We know that. It overshoots. But a lot of times this market always tells you what lies in the future. You know what I mean? Oh, these are just zones. Niner zones on different time frames. All right, guys. I could keep you here to 3 in the morning if you want to talk shop. People listen to this thing on recording and they're like, what the does this guy ever shut up? They're looking for the end of the recording. That's all right, though. They should be here live, right? That's their fault. All right, everybody. I appreciate all you guys stopping by, gals and girls and guys, I should say. All right. Good luck this week. All right. Play smart, nice and easy. We got some things to keep an eye on. And anybody who's new, wallstreetjesus.com if you're looking for any additional information. All right. Be good. Stay safe.